What's up, guys? This is Power of the Dollar, and I have a great video for you today. If you know absolutely nothing about stock charts, this video is for you. To be clear, I am not a billionaire hedge fund investor. I'm just an average guy who slowly but surely learned how to read charts so I could buy stocks when they go on sale and have a great margin of safety. As always, none of this is financial or investing advice. My only goal is to spark some interest in average people out there who want to become financially independent. So without further delay, let's jump right into it. This website is called stockcharts.com. There's a free version and a premium paid version. I've been able to research and find stocks when they're very cheap with the free version. Yes, there's a couple pop-ups from time to time, but aside from that, this website is excellent. So let's go to the top here where it says enter symbol or name. We're going to pick a company that everybody knows. Type in the letter F, and that stands for Ford Motor Company. Now there's a bunch of pop-ups here, so what I'm going to do is zoom in on the chart only. Here we are with the chart of Ford Motor Company. We're going to scroll down here to where it says chart type. Click the drop down box and select candlesticks. After that, come down here to the period. These are time frames. Go to range and select 5 years. From there, come down here to indicators. Change this price performance to RSI. Once you're done with that, let's scroll back up to the chart. Long story short, here on the right, 5, 6, 7, 8, this is the price of Ford's stock. And this is over a 5-year period of time. So if we come over here to, let's say, August of 2020, you'll see Ford's stock was right around this range and come across. So it was about $5.55 at that time. And here today, in July of 2025, Ford stock is about $11.72. And back in 2022, the stock went as high as almost $20. So what everyone starts to wonder is, how do I know to buy stocks here when it dips? How do I know to sell stocks here when it's real high and before it sells off again? I'm going to show you a couple clues and tips to do just that. So what I'm going to do is go up to this right-hand corner here. There's a blue button. It's a little cut off because I don't want the pop-ups distracting us. It says to annotate. It's just a draw, simply put. So click it. It's going to give you a couple things that you can do to draw on here. So I'll pick a green line. Drop down, click green. Make it a pretty thick line. And what I'm going to do is draw it here at the bottom of this. Can make this arrow go away. Take that off. So check this out. You see it, the price bounces right here, bounces there, again, and again. What's this called? This is called support line. And now what we can do is go up and draw another line, and I'm going to make this one red. And I'm going to come across here at the top. Every time price hits this red line, it bounces back down. Every time it hits this line down here, it bounces back up. This red line up here is called resistance. Every time the stock price hits this price point, around $13.50, it hits a resistance zone. People sell the stock then. And anytime the stock comes down to this $8.50 range, it's called support. That's a support line where people see it hit this price, they buy it, and they wait for it to go up, and then they sell it when it hits this resistance here. This is a very basic overview of support and resistance. And now that you know how to identify support and resistance, and you're probably wondering, what other clues can I use to try and find out when it's a good time to buy and a good time to sell? So let's start when it's a good time to buy. I'm going to come up here. I already have the color green. I'm going to come down here and select this circle. And here, at about $8.50 when it was a good time to buy, I'm going to follow this up to this indicator up here. I'm going to draw a circle, and I'm going to do that for all of these $8.50 range prices. Just go across and get them all. And then I'm going to do the same, but in red for when it was a good time to sell. So I'm going to follow the price right here. I'm going to come up. Get rid of this thing. And what does this mean? This is called the RSI. That stands for Relative Strength Indicator. is this stock very strong right now or is it very weak? When the RSI goes up above 70, you can see here it turns blue in all these areas. That means that a ton of people have been buying the stock and the price is going really high and it's getting a little too high. And very often when a stock hits an RSI of 70 or above, people sell the stock. So here, 3 different times, the stock price hit this $13.50 resistance range and sold off. And every single time it hit that range of $3.50, the RSI was also above 70 in all 3 cases. Get rid of this. And the same goes here for buying. Anytime that the stock price hit this buy range of $8.50, $9, that range, the RSIs drop below 30. And typically that's a point where people like to buy. That gives you a good margin of safety. But with that being said, no indicator is perfect. You'll go all over the internet and people will claim to have the best indicators around. They'll have lines everywhere. And before you know it, they don't know whether to buy or sell either, because everything on a chart could be a clue to either buy or sell. But these 2 things here are pretty tried and true. These are 2 very good clues to help you buy or sell a stock. If you're a detective investigating something and you only have 1 clue, you really can't go and arrest someone on that. But you need to start gathering clues. You need more evidence. You need to see if you're going to arrest someone or buy a stock, you need to see if it's right here at this good range, if it's a good buy range historically. Going back 3 years, anytime the stock hits $8.50, people buy it up like crazy. And anytime it hits $13.50, people sell it like crazy. Those are all clues that investors are looking at and gathering to try and make their decisions. A couple of the lines in this chart here, there's a red, blue, and a green line. Those are called moving averages. It's hard to see, and I will zoom in on this, but there's a green line here. That's the 20-day moving average. That's the average over the last 20 days of where the stock price has been. And this blue line is the 50-day moving average, and this red line is the 200-day moving average. Sometimes these moving averages do work as a sort of resistance or support. You can see here the 200-day moving average was curling up as the price was going up, and the price bounced off of it right here. Same goes for the 50. Here, the price bounced right off of the 50-day moving average right there. And typically what you want is the 20-day to move up above the 50-day and eventually have the 50-day move up and above the 200-day, meaning there's a lot of momentum moving upward in the short, medium, and long-term trend. So here I've zoomed in on the last 6 months of data for Ford stock. This is today here highlighted in yellow, and this is 6 months ago. And this green line is the 20-day moving average. This blue line is the 50, and this red line is the 200-day moving average. And naturally, when you have 20 days worth of data, it's going to be a little more accurate on these dips and uptrends. That's why it makes more up and down movement. The 50 is a wider range of data. It's 50 days. It does go up and down, but it's less extreme, as you can see. And the 200-day moving average is a lot of data. It's the last 200 days. That's why it doesn't really bob up and down like these shorter duration moving averages. But here in mid-April, the 20-day moving average went above the 50-day moving average. And then here in mid-May, both of those, the 20 and the 50, went above the 200-day moving average. That's what investors and traders call a bullish sign. A bull market is when the market goes up. Something that's bullish is going to help make the stock go up. So when all 3 of these are up and above one another, starting with the shorter, medium, and then the longer term, when they're all trending up, that's very bullish. And on the other side of that dime is something called bearish. That's when a stock or the market is going downward. And here you can see the 20-day moving average went below the 50, and then here both of them went below the 200, which is considered bearish. And right here, the 200-day moving average worked as a resistance. Once again, we talked about resistance before, that when the price hits a line, it bounces off of it. But it didn't take long for the 20-day moving average to move above the 50 and then above the 200. And here, this stock just went off to the races. But as we can see, the RSI is starting to get very hot. It's been above 70. So some people may be selling to protect their profits in the event that this stock starts to sell off once again. In the last part of this video, I'm going to be covering gaps. And you can see here between July and August, Ford got some really bad news. I don't know what it was, but it caused the price to go from about $12.75 down to about $10.50 in one day. That leaves a gap in price like you see right here. And when it comes to gaps and stock charts, most gaps get filled over time. And you come over here to the right and you can see this stock price is coming up and it will eventually fill this gap up to $12.50. Now this doesn't happen overnight and they don't always get filled, but typically gaps get filled in due time. And if you look online, a lot of people have been calling for this gap to get filled. You can see the prices going up and there's a lot of momentum behind this, which is very bullish for a stock in this scenario. And stock prices don't just gap down like we saw with Ford. Now, truth be told, I don't know anything about this company or stock, but I was just looking for a stock that gapped up just like this. This company must have received some sort of good news to cause this sort of volatile upward price action. Another clue that we can use here is the RSI. Take a look at this. The RSI is very hot, very high up, well above 70. So that could be another clue to maybe sell if you held a stock just like this in this position. Because remember, most gaps in the stock market get filled, both upward and downward. So before we close this out, let's try to predict where the stock market may be headed. This is a chart of the S&P 500. That's the 500 largest United States companies, all packed into one viable stock, also known as an ETF. And remember, we're detectives looking for clues if it's a good time to buy a stock or sell a stock. There's a saying out there, you need conviction before you buy or sell a stock. You need to be convinced if it's a good time to buy or sell. Just like a crime, to be convicted, there needs to be evidence for or against the case. And some of those clues we covered are the strength indicator here at the top to see if stock prices are weak or strong. We covered moving averages, the green, blue, and red line, short term in green, medium term in blue, and longer term trends in red. And we also covered when they cross over each other and how that's very good for stock price. And also what happens when they cross down below one another and how that's bad for stock price. We also covered resistance and support lines here at the top in the blue. This is a resistance line. And finally, we talked about gaps and how most gaps get filled both upward and downward in the stock market. So there's a whole lot going on in this stock chart. I drew up a whole bunch of things on purpose just to review everything we've talked about in this video. And truth be told, I have no idea where the stock market's going. It recently just made all-time highs, going very extreme on the RSI. And as you can see, that did lead to a little bit of a sell-off here. But in recent weeks, it's gapped up 3 times. And remember, most gaps in the stock market get filled. So will this gap here around 600 get filled downward? I don't know. But just back in mid-May, the 20-day moving average crossed over the 200 and the 50-day moving average more recently crossed over the 200, which is a very bullish sign for any stock that's had that happen. In my opinion, I think the stock market is a little overheated. I think this RSI is telling us exactly what we need to know. And me personally, I'm not buying stocks here at the top. Like I said in the beginning, I want a big margin of safety. I want stocks when they're really cheap and they're on sale. When you go to the store, you don't want to overpay for something. You want to get the best deal you possibly can. And that's what all these clues and indicators are here for, to help you get good deals on stocks. And when you get good deals on stocks of high quality, cash flowing, money making companies, that's going to help you achieve financial freedom sooner. And that's what this is all about. And as always, I don't pretend to know everything. I'm just an average guy who's trying to reach financial freedom myself. And I hope these videos help you out. And if they do, hit that like button. I'd really appreciate that. And if you have any questions or comments, just drop a comment below. And don't forget to subscribe. I have a ton of videos in the pipeline just like this. And with that being said, I'll see you next time. Thank you so much for tuning in.